The Member of Parliament of Kiharu, Mr. Ndindi Nyoro, yesterday gave a 1-hour plus speech regarding the current state of the country economic-wise. He was talking about how the debts that we have as a country are not sustainable and that we are not heading in the right direction if we're going to continue in the same trajectory. Now, let me just give you the credentials for Mr. Ndindi Nyoro. He's the ex-chairperson, yes, he's the ex-chairperson of the Parliamentary Budgeting Committee. Yes, he was ousted in March, so he no longer has that power, the power that he had. So some people are saying that when he was inside there, when he was inside the government, why did he not speak up? Why is he speaking up right now? This is not a politics channel, so let's analyze what he talked about. One is that he gave us the inside information that the government usually tilts the numbers for GDP so that when they go outside, when they go to China, when they go to IMF, when they go to the World Bank, they say, hey, look at our country. We are performing very well in terms of GDP. So we are capable of paying off these loans. Give us more loans. That's the narrative out there. But according to him, is that these figures are tilted, yet we're supposed to pay back those loans. He even gave us figures that our budget was 3.9 trillion. Out of the 3.9 trillion, take away 1 trillion to 1.3 trillion that is going to be used to pay off interest, only interest on the debts that we have. So when you're talking about debts, we're talking about external debts and domestic debts. Domestic debts are the ones that are owed locally. Out of that 1 trillion, 800 billion is going to be used to pay off domestic debts. So we're talking about bonds, in case you own a bond. We're talking about the money that financial institutions lend to the government, so banks. We're talking about pension schemes, because the money that you save for retirement is also there, because the money that is in your pension scheme is also in the government. They lend it out. The 800 billion is going to be used to pay off interest on the debts that the country has domestically. And the 200 to 250 billion is going to be used to pay interest on the external debt, the Eurobonds. So the question is, yes, if we are not able to pay off these debts in time, because that is something that he's foreseeing, the government will have to restructure these debts. They would have to go to the IMF and tell them, hey, extend for us the repayment period. At least that can be done. But what will happen if it's a similar case for domestic debts? Do you go out to the people who bought bonds? Do you go out to these insurance companies, to these banks, to these pension schemes and tell them, extend these debt terms? Are you going to postpone these debt repayments? Are you going to pay them less? If ever that is to be done, it's going to be detrimental. It's going to have a negative effect in the economy. Because think about it. How can a bank go to its shareholders and explain, yes, we were expecting this revenue from these bonds that we gave the government, and the government has extended that? Banks have shareholders. How are you going to explain that to them? How are you going to explain to me, as somebody who's lent out money to the government, that this money that you're supposed to get back after 10 years, you'll get it back after 15 years, yet this is money that I had planned? It's going to create trust issues. It's going to have a trickle-down effect on everyone who banks with that bank. It's going to affect everyone who has their pension money in that pension scheme. Ndindi Nyoro also went ahead to talk about the revenue collection in the country, that the government is imposing more taxes, more levies. So in as much as the government is trying to collect more from its people, it's only having a marginal effect in terms of the money that it's collecting. Let me put it this way. The government imposes the housing levy that you must pay. So it reduces the amount of money that you get from your paycheck. You used to make, let's say, 45K, now you make 40K. That's just an example. Or you used to make 200,000 net income, now you make 180,000 net income because you lost 1.5% of your income to this levy that has been imposed. What will happen is that if you used to use that extra money, or if you used to spend that extra money or invest it somewhere, you're not going to be doing that anymore, because now the government has reduced your disposable income. Assuming that you used to send these 20,000 Kenyan shillings to your family back home, or these 8,000 Kenyan shillings to your uncle, to your brother, now they're not going to have it because your money has reduced. So if they used to use that money to purchase goods and services that, let's say, are subject to VAT, now they won't be able to buy that. So the government has collected more from your paycheck, but the collection that is from the VAT side and these other services and goods that are taxed has also reduced. So we have an increase on one side, a reduction on this other side. And that, according to him, according to his experience in the budgeting committee and what he has seen, is that it only has a marginal effect, a marginal increase. So in short, these taxation policies that the government is imposing are not optimal, and that we need to have more economics. We need to integrate more economics when we are coming up with that figure that, yes, let's put the housing levy to 1.5%. It has to be research driven and not just an arbitrary number that a member of parliament comes in and says, okay, it needs to be 1.5%, it needs to be 32%. Has research been done that this is the optimal percentage? Those are some of the things that he talked about. They were mainly about economics. Go ahead and check out that clip. It's a 1-hour video. It's very educational in terms of the economic policies that the government has put in place. And he also talked about how when they are budgeting money, for example, now that you're going to be having a budget in place for 2025, for 2025 to 2026, that a huge chunk of the money that they allocate is non-discretionary. So non-discretionary means that this money is going to be used in expenses that cannot be reduced. And if they're going to be reduced, they're fixed. They're going to have a negative effect in the economy. For example, you cannot reduce money that is spent on MP salaries, though that can be reduced. You cannot reduce the incomes that you pay civil servants. You cannot reduce the county government allocations. If the county government is supposed to get, let's say, 500 billion or 300 million or a certain number, you just can't reduce that and say, we're trying to save the money that we have, let's allocate it elsewhere. So a huge chunk of the budget that we make, that they make, is non-discretionary. It cannot be easily manipulated. And that is one of the challenges that he faced, according to him, and that a small chunk of the money, a portion of the money, is now discretionary. It can go to activities like fuel allowance that the members of parliament are proposing. What we've learned from all this is that you actually can't separate politics from economics. You can't separate, though in the ideal world, they should be separate. Economics should be market-based, research-based, and politics should also be set aside, but that is not the case. That's why it's important that we elect leaders that have an economic vision for the country. But again, one might argue that he's just a politician. But whatever that he talked about yesterday made a lot of economic sense in as much as he's a politician. So what do you think? What do you think is the solution to what we have right now? How can we have good governance in the country? I'd love to know your thoughts on the comments. See you in the next video.